Hey everybody, Jake here at TrendSpider to go over the weekend update into the last week of July. And overall, pretty strong week. Definitely not a great way to end the week, but not shocking with with some of the market moving events next week, as well as just profit taking into the weekend after a really strong week to the upside. So starting with the S&P 500 ETF SPY, you'll see here that we did have a nice bear pennant breakout here. So this is something I like to talk about a lot. Just because something is technically a bear pennant or a bull pennant, that's just the setup, right? A bear pennant is when you have a big move down. So for example, here's your move down, and then you have a pennant form. It doesn't really have anything to do with that it's going to be bearish. A lot of these setups do have statistical biases, i.e., 60% of the time price breaks up or down through a setup. But the actual name of a setup is simply just based on the price action. So bear pennant, move down, a pennant. In this case, you can see here we broke to the upside and pretty much went straight up for the last 3 days. And then today with the gap above, we did find some resistance. Now, we still have the swing high VWAP zone, which is going to be important to remember. So these swing highs here from March and early April on a lot of these names, you're really going to see which names are leading and which names are lagging. So if you really want to look at leaders and laggards in the market, start from a constant point and then, in this case, anchor a VWAP from that point and see which stocks are above that level, which stocks are below that level, and you'll really get an idea of what's a leader, what's a laggard. So in this case, you can see here on the S&P 500, we're actually lagging the Qs. So you can see here we're still very below the swing high VWAP from late March. The VWAP zone above is around 404 to 409. And you can see on the weekly chart that we do have this falling wedge, very, very, barely a falling wedge, but more of a channel. But these two lines are converging, so we'll call it a falling wedge. We did move up right to that resistance zone this week. Earlier in the week, I did actually draw this accidentally on linear scale, so it did look like we were breaking out. So notice here on linear scale, I would need to adjust this trend zone here. So now we're connecting these wicks here. So it actually looked like we broke out. Either way, we didn't break out of this area, meaning we didn't close above it. So if we turn log scale back on, you'll see here that now in order to connect these 2 points here and extend it, we actually hit pretty much right at the top of this resistance zone. So either way, we're still not out of the woods yet, and we are still below that swing high VWAP. So definitely a little bit of a melt up this week, and a melt up is simply a short-term move where you've got over leveraged positions on one side. So in this case, you melt up because a lot of people were thinking we were just going to break down through this bearish pennant. We broke out, and then people had to cover their positions, and that creates artificial buying to the upside in the short term. From here, we'll see if this gap fills and we test this swing high zone above. But like I said, there's a lot of events next week that will determine the direction of the market probably for the next couple weeks after that. In this case, you can see the Qs are definitely leading the market. Why? Well, because we're at this swing high VWAP from the same point, and we touched this area and pulled back almost textbook what you'd want to see here, almost right at this VWAP zone, pulled back, and that's pretty just textbook. You move up, you pull back. In this case, we had an ascending triangle breakout. Wouldn't shock me if we even retest this area. A lot of the time when you have a breakout, you retest where you broke out from and then continue up. But all in all, we'll let price action decide the next move. In this case, you can see on the weekly chart, we do have that falling wedge breakout. We had the breakout during the first week of July. We retested that previous resistance, got a bounce, and then continued up this week. So all in all, still a green week. I think a lot of people are going into the weekend thinking about Friday's price action and not remembering kind of where we came from earlier in the week. IWM, a really strong mover and a great example of just resistance, gaps acting as resistance, or they can act as support. In this case, over the last several days, you had the breakout of this descending trend zone here. So this is your breakout. You then retested that zone, bounced, and then we moved up to this gap above, barely missed it by about 20 cents this morning before pulling back really hard and creating a pretty big, not only a bearish engulfing candle, but also an outside bar here going into the week ahead. Now on the weekly chart, you can see here that we still do have a pretty solid green candle for the week. And your main level to get above is this COVID VWAP. So this is just the volume weighted average price from the COVID low. You can see here that we have tested this general area multiple times on both support and resistance side of things. So your main upside level above would be around 187.50. Let's call it 187 to 188 at this point. Moving on to Bitcoin. Bitcoin, is also having a decent week. Now on the daily chart, you can see here that we do have this bear flag that is still in play. We barely missed the close above 23,500, which would have been the trigger for a bigger move to the upside. Literally closed right around 23,375 or so on the 18th of July and then have pulled back since. We did have an intraday break above this level, but we actually did not close above it. So the bear flag is still in play here. But on the longer term side of things, you can see here that we do have this longer term trend zone that is also still in play and acting as support for now. The problem with crypto is I do these videos on Friday and crypto still has 2 days of trading after these videos are made. So for now, the weekly candle looks decent, but the week's not over. It ends on Sunday for Bitcoin, and we'll just have to see what this candle looks like on Sunday. Now, going into some individual names, Apple is definitely one of the leaders in the market. Why? Well, same reason that we talked about the Qs leading the S&P 500. You can see here this swing high VWAP from that same point, late March. You can see we broke above that swing high VWAP zone earlier in the week. We moved up and then had this previous support area act as resistance on Friday, and we did have a slight pullback. Now, on the weekly chart, you can see here that we do have this falling wedge breakout as well, similar to what the Qs looked like, except we didn't actually test that previous resistance last week like we did in the Qs. But you can see here that we did break a pretty crucial level. This area highlighted in orange, this previous support zone, then acted as resistance back in late May, and now we actually just closed above it for the week. So all in all, every candle that we've gone over so far on the weekly side is green. So just keep in mind, it is important to keep those weekly candles in mind and not just think about the price action that did happen on Friday. Moving into NVIDIA, another one that had a really strong continuation from last week's falling wedge breakout. You can see the falling wedge here on the daily chart. You can see that we had this breakout on Friday of last week. And then this whole week, we continued to move up pretty much right to the swing high VWAP above. You can see here that this is the same point as we've anchored from the other charts. We're just measuring the volume weighted average price from this high from March 29th. And you can see we're actually not above that area yet. And, that is going to be your main level to close above for kind of a change in trend here. So I'd say close around above 186, 187 would get you there. Now, on the weekly chart, you can see here that the 2019 low is really the main VWAP level that is holding. So you can see here, all I did was start the volume weighted average price from this low in 2019. You can see this area is held here. It's held here during the COVID low, and it also held here a couple weeks ago. So all in all, this is definitely the line that's making the market on these moves down. So if we did happen to move down from this point that we're at, your level around 140 exactly is going to be the main level that needs to hold and close above. Remember here, we had price action close below this back in August of 2019 once, and then we had a big move up above it. So really, if we have 2 weekly closes below this line, that's going to be something that hasn't happened since 2019, and that's when things may get a little interesting. But for now, really just pulling back a little bit after a really strong move to the upside from the 13th to the 21st. And within that time frame, we literally had a 24% move in 7 days. So it's not shocking to see a little bit of a pullback here. That's just what the markets do, especially into a weekend and into a big week of economic and market moving events coming up. NEO is another one. Definitely thought NEO would get a little more sympathy with the Tesla move, but not so much. You can see here that we do have the gap above highlighted by this yellow rectangle. You can see here from this May low. So I'll just highlight this here. That's kind of your swing low here. Since this point, the volume weighted average price has acted as a nice level here. And if anyone's kind of wanting to learn how I use these VWAP zones, right? So if we go to properties, right click on the VWAP, and I just go to no bands, this is actually your VWAP, right? So your VWAP is this blue line. But notice that price action broke below this area 2 times. So what I like to do is I like to see, okay, well, is there a common theme here? Was there a percent below this VWAP that the price did hold? And so sometimes it just takes some trial and error. In this case, that was about a 5% band. So you'll see here now, the price action is respecting this negative 5% band. So that's how I create these VWAP zones here. And you can see here that the VWAP zone is actually right in line with the bottom of this potential bull flag. And once again, the only reason we're calling this a bull flag is you have to look at where it's come from. You have this big move up. That's your flag pole. Here's your flag. And, that's where the bull comes from. The bull is essentially a function of the pole. So the pole, we had a move up. Now we're consolidating in this flag. That's why it's called a bull flag. Don't think because it's a bull flag, it's definitely going to go up. Price action determines that. Now on the weekly chart, you can see here that we have this symmetrical triangle that did start to break down this week. So definitely not looking great. We don't have any gaps below here, but as I mentioned, in the daily chart, we do have this VWAP below. So if we just anchor the VWAP from this point, you can see that goes all the way down to around 1750 to 1775. So if we break down below that area, that's when things definitely will change a little bit with the status quo of this current move to the upside. Tesla is the next one that we'll look at, and Tesla has had a really strong move to the upside. You can see Tesla doesn't have the same swing high VWAP as the rest of the market. It was actually not VWAP, but swing high point. You can see this actually topped out on April 4th, about 3 or 4 days after a lot of these other charts had their swing highs. But still, same thing, right? If I take away this band and just do no bands, here's your VWAP. But notice here how the price, kind of bounced above this area and pulled back. So I want to capture this price action and add that to the VWAP zone. So once again, just trial and error. And so when I add the bands, I ended up finding about a 5% move to the upside was exactly, the area that caught not only this move, but also caught the top of this move today. We did move a little bit above it, but we actually closed in that zone again. So this is how I kind of create these VWAP offsets. It's not a perfect science. You do have to do some trial and error. Each stock's going to have a little more of a margin of error depending on the personality of the stock. But in this case, the swing high VWAP is about 5% with an offset of about 5% here. And so far that is holding into the end of the week when we did have a continued move up, but we did pull back and pretty much recapture a lot of the move that we had. Pretty much closed almost right where we closed on Thursday with about, almost a perfectly even close. Now on the weekly chart, you can see here that if we just anchor the volume by price from the all-time highs here, and that's just essentially measuring where volume has been distributed since the all-time highs, you can see we have this huge volume shelf that price finally broke above to the upside. So really, this main area, this swing high VWAP zone, and if we just add that to the weekly chart, that's going to be the main level you want to get above. And if we do get above that, that's when things get interesting. But for now, we are still kind of stuck in that general zone. Next one that we'll go over is Google. Google is one that actually does not look great. So, this is where some may have a little more of a bear thesis. So we have essentially this bear flag. You can see it on the daily chart on the left. You can see it on the weekly chart on the right. So if I kind of zoom out here on the weekly chart, you'll see the COVID low VWAP is right below. So if we did happen to break down through this bear flag, your COVID low VWAP is right around 103 to 103.50, give or take how much margin of error you're using around this line. Notice how my line is really thick. If I make it as thin as possible, the line stroke on the properties, this gets a lot more precise, right around 103.54, let's call it 103.75. So let's call it 103 to 104. You don't have to be perfect in these measurements. Just give it a general zone. 103 to 104 is definitely going to be the level that you want to watch below if this bear flag breaks to the downside. And if it continues to break down below that area, that's when this support zone below that's a function of pretty much the low from January of 2022 and the low of May of 2022. Connect those points and extend it. This area below would be your next area to watch if that COVID low VWAP zone breaks down. And that is a function of time. So I have a lot of people ask, what's the price, or, what's that level below? Well, if you're using horizontal levels, that level below is not going to change. For example, here, notice here you've got, this is like a static level, right? It's not changing. It's always going to be this low from the May 24th, right around, let's say 102 to 103. That's not going to change. However, if you look at the diagonal zone into Monday, if we moved straight down here, then your level is going to be maybe around 92.50 all the way up to around 93.50. If it takes another day, then the downside can change, right? Your downside now goes to around 91.75. If it takes multiple days, notice how this continues to get lower and lower. And each one of these rectangles is essentially a candle for the next day. So the levels that you're going to be seeing on a diagonal zone is only good for one day. And then as time moves on, so does that price level that you're watching below. So let's say this takes 1, 2, 3, 4, 5, 6, 7 days. Then all of a sudden your price to watch below would be in the upper 80s. So that's one thing to always remember with diagonal zones. There's not a static level to watch. It's always changing as time moves forward. And I think a lot of people have trouble understanding that, but it is really crucial to understand if you are using the diagonal levels. So hopefully this video helped understand a little more about how you can use some of these setups and how, each setup is a setup based on price action, right? So same thing here. We've got this bear flag. Here's your move down. This is what makes it the bear. This is what makes it the flag because it's flagging. But until it actually breaks down, then it will be bearish. If it breaks to the upside, it's not going to, it's still a bear flag, but it broke to the upside. So, that's something I wanted to mention. Hopefully this video is helpful for a number of reasons. Sorry, I can't talk today and say R. But hopefully this video was really just a market update to see a different perspective in the markets, as well as, different ways to use TrendSpider. One thing that I'll mention, especially if you're a very active trader and you may not be in front of the screen all the time, make sure to use the alerts, right? If you don't have time to watch price action possibly break down through this flag and possibly test this COVID low VWAP below, just right click, create an alert at this line, and you can make this line as thick or thin as you want. So you can create an area bigger than the 103 to 104. You can make this, an area that's $5 wide. So definitely make sure to use the alerts. Remember, you get these alerts sent to your phone and your email when they trigger. And they're just a great way to utilize the platform so you don't have to be in front of the screen all the time. Everybody have a great weekend. Thank you for watching, and hopefully this video is helpful, and we'll see you next time.